If there's one cryptocurrency today and for years that scares me a lot, it is USDT. And what is funny, it's that the day I finally decide to make a video, the United States revealed that it wants to attack stablecoins via a bill that could spell the end of certain stablecoin or in any case regulate them hardly. And on that, I must say they are not necessarily wrong, because fraud, secrets, embezzlement of money, falsification of documents, market manipulation, so many accusations related to the cryptocurrency number 3, USDT. And as we say, too big to fail. Personally, I don't believe in it. So in this survey, don't hesitate to drop a like and subscribe to support my work and the channel, because what I'm going to reveal today will scare you a lot. So USDT real-time bomb investigation.
Why there isn't more transparency, I'd like to see it too.
Who the hell is buying all these stablecoins?
And all the others, all the banks that are failing, you are looking again at Tether.
Okay, let's go straight to the point with some USDT numbers to get you started. Tell yourself that as I speak to you, USDT is the most popular and widely used stablecoin in the crypto space, because its market capitalization exceeds $80 billion, which places it in the top 3 cryptocurrencies in terms of capitalization behind Bitcoin and Ethereum. And what surprises me as this survey is carried out is that very little talks about it, or perhaps the big players in the market try to hide the truth under the carpet. So I don't want to scare you, but I think it is important to warn you, to talk about the risk, and that I am now giving you the fact and advice to limit those risks. We are talking here all the same about the number 1 stablecoin, and on which a large part of the ecosystem is based, and the number 1 stablecoin in front of the USDT, which, as you know, has known dark days, and the BUSD from Binance, which left the top 10 and which is doomed to gradually disappear. But what is USDT? US for United States and D for dollar. T for Tether, the issued company named Tether Limited. It is simply a stablecoin, that is to say a cryptocurrency whose value is closely linked to that of a fiat currency. In this case, it is the US dollar. And the idea of this stablecoin is to have a stable, low volatility digital asset that facilitates transaction and exchanges on trading platforms. And precisely, let's take a little step back in its history. USDT was created in 2014 by Tether Limited, a Hong Kong-based company now run by Paolo Erdoino, and originally the goal was to create a bridge between the traditional currencies and cryptocurrencies. And guess what? It worked. Today, USDT is used in most cryptocurrencies transactions, and as soon as you want to trade, you use USDT. As soon as you want to cap yourself off from the volatility of a crypto, you go through the USDT, which is the most used pair. But exactly what it is based on? Well, each USDT is supposed to be backed by a US dollar held in reserve by Tether Limited. Yes, supposed, and you will see in details why this belief is called into questions. In other words, this means that for every USDT in circulation, there should be a real dollar somewhere. But the questions that we can legitimately ask ourselves are, where are they? Do they really exist? Because it is on this theory that the USDT and the confidence that we have in this stablecoin, that stability of the value of USDT is based. And before talking about its weaknesses, let's talk about its strengths. Indeed, this sulfurous currency has existed for a long time and is based on 3 solid axes. The first one is the fact that it has its legitimacy that few projects can ignore. It's solid, it's old, it's strong. And the second one is it is accepted by many vendors and protocols and platforms in the blockchain universe, whether it's for payment or exchange. And the number 3 axe is there are no denying its defining role in the crypto ecosystem. And despite these 3 axes, there is still a debate. Precisely delve into the controversies and concerns surrounding the USDT and the Tether Limited company. We are going to dissect all of this so that you can understand the issues and potential risks associated with the use of this stablecoin. Because yes, USDT has been a real saga since its inception, and this is in 5 episodes. And as I told you, USDT is supposed to be backed by US dollar reserves held by Tether Limited. However, these reserves are problematic. For what? Because Tether has not always been transparent about their actual composition, and there are many other cases that also raise questions. Flashback. Episode 1, we started in 2017, where researchers suggested that the issuance of USDT was linked to the dramatic rise of the price of Bitcoin. So Tether and Bitfinex, which is an exchange linked to Tether, same owners, have been accused of manipulating the Bitcoin market. And as a reminder, Bitfinex in 2016 had more than 120,000 Bitcoins stolen from their exchange. Episode 2, in 2018, rumors swirled that Tether might be insolvent due to a lack of dollar reserves to back USDT. And additionally, the same year, Tether ended its relationship auditing firm Fried LLP, raising even more concerns about the company's transparencies and solvency. And it continues with the third episode in 2019 with the General Attorney of New York, who launched an investigation into Tether and Bitfinex, accusing them then of concealing an $850 million loss. Yes, you heard it, $850 million. And this investigation lasted for 2 years and resulted in a settlement in February 2021, where Tether agreed to pay $18.5 million fine and provided quarterly reports on its reserve. Episode 4 of this saga takes place in May 2021. Tether published for the first time a report signed by Moore Cayman, a famous auditing firm, announcing reserves. About 75% of those 41 billion in reserves were in cash or equivalent, and the remaining 25% in secured or commercial securities. And except that this audit was not independent, which fueled Tether's lack of transparency, but also question about the quality of its assets in reserve. And this has raised even more concerns about Tether's ability to maintain the famous 1-to-1 peg with the US dollar when needed. And then in March, the last episode, since according to the Wall Street Journal, it seemed that the issuer of the USDT would have opened bank accounts using forged documents. This shocking revelation comes after an in-depth investigation by US regulators into Tether's practices. Informed sources revealed that the company would have issued these falsified bank accounts to dodge the laws and regulation enforced concerning money laundering and the financing of terrorism. Just that. So yes, for some time now, Tether has announced that it wants to become more transparent about its reserve, in particular after announcing monthly rather than quarterly audits last August. And the fact remains that with all these controversies, we are entitled to ask ourselves questions. And on your side, as an investor, you must push you to measure the risk for you and also take into account the potential impact they could have on the cryptocurrency market. It's super important, and precisely we are going to talk about it now with 3 potential impacts on investments and the cryptocurrency market if ever the USDT were in danger. First of all, you should understand that trust in USDT is crucial for its stability. If investors begin to doubt Tether's creditworthiness, it could lead to a cash race where investors seek to exchange their USDT for dollars or other cryptocurrencies. And such a scenario could cause a domino effect on the cryptocurrency market itself. And since USDT is widely used for transaction and exchanges, a potential depeg, so a loss of this balance via the 1-to-1 parity with the dollar, would inevitably have an impact on the market. It could even lead to a market crash. I'm not telling you that it's going to happen, even less that I want it to happen. Quite the contrary, in fact. But you must be aware of these types of risks. Additionally, if regulators decide to take drastic action against Tether, it could limit investor access to USDT and affect transactions on exchanges. Liquidity and trading volume could then suffer. In fact, USDT issuers have always drawn the attention of regulators to stablecoins in general. Stricter regulations could be in place, which could change the way stablecoins are used and issued in the future. Even if the American bill aimed at regulation stablecoins only directly affects stablecoins such as LUSD or DAI, USDT and USDC could suffer a ripple effect from it. And finally, as USDT is often seen as a safe haven during times of volatility in the cryptocurrency market, loss of confidence in these stablecoins could lead investors to look for other alternatives to protect their investment, but don't be discouraged. There are also lessons to be learned from these controversies. They show the need for you, the investor, to exercise caution when choosing the assets in which to invest. And there are plenty of things to keep in mind when you want to invest, so listen carefully to the following 4 tips. But before continuing, I want you to remind that the information and advice I share in this video is no financial advice. I'm just a normal guy talking about news, talking about my experience. So remember, investing, especially in cryptocurrencies, involves risk, and you should do your own research. It's crucial. And the first thing is you have to stay informed and up to date on developments and news around cryptocurrencies and especially USDT, because the whole ecosystem is linked. Regulations and market conditions are changing rapidly, and it is very important to follow these changes to adapt your investment strategy accordingly, and above all, to prevent risk. So you can do so by subscribing to my channel. I will speak about this subject if something changes. And another essential point, and I often repeat it in my videos, but it is so important, don't put all your eggs in one basket. Diversifying your portfolio is an effective way to reduce risk. By spreading your investment across multiple stablecoins or assets, you lessen the impact of a potential failure or controversy over a single asset such as USDT. And yes, I know what you are going to tell me. Given what happened with the FTX exchange affair or the USDC depegged of Circle recently, nothing is certain in this environment. Well, yes, you're absolutely right. And that's why you can also invest in other types of assets such as stocks, bonds, and safe haven such as gold. A diversified portfolio allows you to spread the risk and better cope with the fluctuation of the different markets or possible crashes. Besides, I'm going to talk more and more about this type of assets on my channel, so keep in touch. And because precisely nothing is certain, keep your feet on the ground and stay flexible. The world of cryptos is a bit like the history of USDT. It goes fast and it moves all the time. So be prepared to adjust your plans if the tide changes. And my opinion is that the fact that the US is attacking the stablecoin is a good thing. Very often, and you must have noticed, the crypto market is still the Far West in certain aspects, and that any regulation is good for cleaning up the market, gaining stability, and then facilitating adoption. And the road is long but fascinating. And to learn more about the subject, I've linked you videos in the description, and you can also look at this video, which is linked to this one, and it is very important. See you in the next video next week. Take care. Don't forget to like, to subscribe. See you. Bye.